I just pressed live. I wanted you to keep singing while I was pressing.
I was watching.
I was like, I might get him.
I was just singing. What was it?
Good. It was good.
What that way or whatever? But I don't know. It's NSYNC, Backstreet Boys. I was singing to Amit while I was walking away.
It was very good. It was good singing. Steven will be here. It's me, Steven, and Matt Money for this week's edition of Palantir Weekly, episode number 85.
Good evening.
There we go. There's Steven.
There he is. Hot Steve.
We've got a lot to discuss in the next hour.
There's some things.
Amit, you might as well break the news because I thought it was fucking amazing.
Amit knocked up his girlfriend.
No, Amit's going to have a special guest.
Oh.
Well, that's still not confirmed yet, fully.
All right, so then we won't say anything.
Yeah, we won't say we don't. I did almost knock up my girlfriend.
Oh.
A while ago.
Wait, you have a girlfriend?
No, like this was in high school.
Oh.
But Plan B is a thing. And
B is a thing.
Get the more expensive one if that ever happens, dude. Don't get the Walgreens brand. Okay, so Dan Ives issues a price target upgrade today of $25 on Palantir. This was a really big deal for the Palantir community. I think primarily because Dan Ives, I was thinking about it today. Who are rock stars on Wall Street? You got Cathie Wood, you got Ross Gerber. And then in terms of media coverage, I think the next is Dan Ives. Like, I know there's Gary Black, but he's more in the Tesla crew. And I know there's some other guys, but they don't get as much, I think, CNBC broadcast distribution, nor do they have the personal brands, 80,000 Twitter followers, etc. That when they say something, like, really a market could move off that. And the only reason
I think you need to give a lot of credit to the entire Fast Money crew and the entire halftime report crew. I mean, there's a lot of people that are.
I like those guys, but you think they say Palantir to 25, the market moves 10% for Palantir?
I think if Josh Brown said it, it moves.
No. I love Josh Brown. He's not moving Palantir.
People that would get a lot of traction saying it.
I love Josh Brown, but he's not moving Palantir. I mean, Steve, the market moved 7% and then ended 13% on the day, and that's not because PCE came down. It's because of this report. And so to me, the point is like Dan Ives is a rock star.
Doesn't he have an article in Barron's coming out tomorrow, or isn't Barron's doing an article about him?
I think they already put it out, to be honest. But like, he's a big deal. I mean, it's a really big deal. It
is a big deal.
And he's covered Tesla for a long time. He's been right on them. He downgraded Tesla many times when I thought he was being fair to them because the Twitter shit was taking up too much of Elon's time. And he said, look, this is bad for the stock. And the stock was downgraded and the stock went down. So I think he's been objective. I think he's been big on tech. He's not big on fintech, not big on gas or anything. He's big on like technology. He thinks right now it's 1995. We're in an AI revolution. And the report that came out today seemed to indicate that he believes Palantir is one of those main players. So I think before we even get to your thoughts, Matt and Steve, let's watch a little bit of him talk about it because this will be great for everyone. It'll also be good for us to see this clip.
I also loved his jacket, by the way. That was sick. I was a fan.
Fashionable as well. He's absolutely fashionable. This is a good 5 minutes. If you guys haven't seen it, this is good to watch. And Steve, did you catch the clip on him on CNBC?
I watched it this afternoon when I got home.
It's worth a second listen. This is going to be
sometimes 5 minutes is all you need.
Honestly, sometimes 5 seconds is all you need. But all right, here we go.
The messy of AI. I mean, that's a tall order right there.
I think that's really what Karp's built. And in my opinion, it's still undiscovered as just a broader AI play, which is why I believe they're the messy of AI. I think there's a golden path right now for them to monetize what we view as potentially $1 trillion market opportunity. And I think investors still have not recognized what this golden goose could be.
Yeah, I mean, as we just mentioned, the stocks moved pretty ferociously here in the last couple of months and since the start of the year. When you think about some of these newer AI applications in real time, they're already being applied on the battlefield. Case in point, Ukraine. Palantir is a key example of that. Do you think this is a situation where investors don't fully understand what this company does because so much of it is defense tech? And yes, I realize it's expanding out to the commercial side too, but there's a lot that they can't talk about, for example.
Well, I think that's the biggest misperception. I could tell you, we're talking to many in the 202 area code. The reputation of Palantir speaks for itself in terms of, any sort of operations, 3-letter agencies. Now, if you're an enterprise CIO, and this is the conversations I've had, you're looking toward AI platform approach, Palantir is potentially the first call. And that's why I think in this AI gold rush, what I view as the fourth industrial revolution, of course, it's NVIDIA, Microsoft top of the mountain with Nadella. You look at second, third, fourth derivatives, right now, Palantir front and center. And that's why I think this is a stock look at our bull case model, I think this is ultimately $25. And I think as they execute, more investors start to look at it.
Wow. And the stock's trading at about 17 or about 17.50 right now. Steve, want to get your thoughts on this, especially since Alex Karp, one of the co-founders and the current CEO of Palantir, did pen a very
to Palantir on this, because there is a meme stockiness to Palantir too. I'm wondering how much of that factors into your calculation.
Yeah, no doubt. I mean, there's a huge retail presence,
right?
And I think this is one where maybe retail has been ahead of institutional in terms of understanding the actual potential AI story. I can tell you, in my conversations today, it's really institutional investors being like, okay, what am I missing in this story? Where is the actual total addressable market opportunity? And can they go from government to commercial? Because I think when you start to look at that, for them is really the opportunity. And if you
All right, so some pretty big words by Dan Ives. Matt, let's start with you. What were your raw thoughts as this came out?
Well, I will take a different lens to it than just kind of reiterating what Dan said. I think the thing that I've noticed, this relates with what Dan has said, this relates with what the mainstream media has said. Once the UK battle with the NHS has sort of backed down a couple months ago, I've seen a complete turn in the mainstream media in favor of Palantir, which I think is pretty interesting. And why I'm bringing this up is I think that there's honestly been, I talked about this a few episodes or a few months back about the Billionaire Boys Club and how the 250 richest people in the world are really the ones that are pushing for all the things and how they operate within the world. And I think that there's been a shift in the Billionaire Boys Club in favor of Palantir. There's no longer this massive battle and fight between all of them. And it's more of a, hey, these guys can actually do more good than what you think. Let's side with them than against them and work with them to kind of make things better. And since I've kind of noticed that UK back down, I've noticed that the mainstream media, the New York Times, CNBC, all these other left-wing sort of facing companies and media outlets are now kind of in favor. Whereas before they were always saying spy sort of company, data is going to be sold for money and all this stuff. It's like they've really changed their tune. And so what I want to bring this up and why I'm bringing this up, and then I'll hand it over to Steve, is because, we've really only been around for 2.5 years in the public markets. So before that, it was obviously the internal people, the VCs that only had a share. Very quickly after 2020, in January 2021, it hit meme stock phase. And then throughout the second half of 2021 and 2022, all it did is would go down and to the right. And we've, over the past year, 18 months, we've culminated this large, great network where we can bounce things off of. We can call out people's bullshit that are people that are talking down about the company, that are spewing negativity. And I think Dan, relating it back to the interview, is really a first notch in the belt about that next level of retail presence, that next level of institutional presence that I think will take the stock kind of forward.
Agreed.
To the point where it's not just our little internal community anymore. It's now starting to break into the next wave of investors. And so if we continue to hit this pace, I mean, if you think we're overvalued now, which I think in the short term we are, but if you're looking 10, 15 years down the road, if you get everybody else's eyes on this and we truly do execute from an AI perspective and AIP continues to be the premier product that I think it can be, I anticipate we could 2x from just here without even any revenue growth, just due to hype of what we're kind of being labeled as within the markets and the retail hype around it. But I think it's positive, and I don't think it's a negative. And I really liked, one, his jacket, and then two, I think he had a lot of great points to say. So it was a really interesting interview and always great to wake up to a higher share price.
Steven, you are a CNBC contributor. What were your thoughts when Matt, or you at least have the voice of a CNBC contributor? What was your thought when Dan Ives put out this press release?
I am not, I repeat, not a CNBC contributor, as Amit says. I love the pastels that he wears, great colors. I think it's very bullish because at some point, Wall Street and the people that are living in 2010 need to recognize that Palantir has proven they are a commercial company. You cannot say that this company is a black box. And Amit, do I care where a company makes money from?
Nope.
Do I care if a dollar comes from commercial or a dollar comes from government?
You could be stabbing a little kid's left eye and selling it for $1 and you'd be fine with it.
Yeah, I would not be okay with that at all. So don't say that. But
You don't say that.
I don't care if Palantir is selling a government contract or they're selling a commercial contract. They're making $1. $1's $1. Now, the biggest thing has been answered. This is a company that everybody questioned branching out into commercial. Obviously, they have proven that there's a market for their product and they continue to expand. You don't get companies like Cisco presenting at your conferences if you don't expand into those markets. You don't team up with hospitals. You don't team up with Jacobs. You don't innovate with BP. There are too many high-profile companies that are saying this company has helped us do X. And Dan Ives has a big voice. A lot of people respect him. He gets airtime on CNBC. A lot of people follow his research. For him to get it and him to come in, it absolutely matters because it sheds eyes on it. And people are going to have to reevaluate what is going on. And if Palantir continues to beat the numbers and continue to grow, at some point, they're going to have to start buying. And what did I say to you on the phone today? If they continue on this path and they get included in the S&P 500, you're going to have index funds that are required to buy. You're going to have total market funds that are required to buy. And guess what? Total market funds and S&P index funds are two of the most popular investments in 401ks.
Correct.
Every 2 weeks, people are putting money into their 401ks, and the money they're going into those funds are going to help buying all the companies in those funds. Now, Palantir last quarter had a 34.77% free cash flow margin. That's freaking crazy. That is such a high margin. Back in Q1 2021, they achieved a 34.06 free cash flow margin, not adjusted. This is a pure free cash flow margin. If they can maintain 33% and above and continue to grow, these multiples are not crazy by any means. You start looking out going forward, this is a company with no debt. They don't have to worry about debt repayments. They don't have to worry about cash going there. They have options. They can do a lot of things.
Can you explain what the free cash flow margin is for those that don't know? I didn't know this a year ago either. So can you explain it for people?
Yes. So everybody who follows Palantir knows that they just became GAAP profitable 2 quarters ago. This is going to be the 3rd quarter they're GAAP profitable. GAAP profitable is your net income, where it's your operating income minus all of your tax, however they do their tax GAAP accounting. I like free cash flow because it's a simpler number to look at. It is harder to manipulate because companies can massage net income with certain accounting metrics and how they allocate things. Free cash flow can't really be distorted. It's simple cash from operations minus all your CapEx. So I like that number because that's where you make acquisitions from, you pay dividends from, you buy back shares from, and you dividends, buybacks, acquisitions, pay down debt. I mean, that's what that pool of money does.
It's the actual cash register, right?
Right. So when you have a 34.77% free cash flow margin, every dollar that you're bringing in, that's your margin. That's how much free cash flow out of your dollar of revenue you're keeping. So you keep growing revenue, and look, their revenue growth, I want to see explode, because if you go back to that 2020 presentation or Q1 2021 presentation, it was very close after they went public.
Yeah.
They had predicted $4 billion in annualized revenue in 2025. Now, we're nowhere near there. I want to see that really ramp up. And if that can ramp up, think about that. If you're generating $4 billion, what's 33% of $4 billion? You're over $1 billion in free cash flow.
Yep.
And that's 1.2 billion.
And that's why I'm kind of aiming towards like an EPS of about $1 in 2026. If they can get the growth, right? Of course, it's going to be hard to get there. But if you think about it, I don't think it's too far-fetched to understand if you start increasing by 20 to 30% a year and you're already at a 2.2 billion after a couple of years of compounding at 30% and your free cash flow margins at, let's just keep it at 1/3, 33%, then you're going to start churning out a lot of cash. And my real question is like, with all this cash, my real question is what is Palantir going to do? Are they going to continue to invest in new platforms? Are they going to create the venture arm that Chris Patel was talking about? I just don't understand, because their operating margin is so high, right? I just don't understand where they would park all that money. Like, it's just going to be such a cash flow machine, and it gets me concerned about, growth.
So
and what they're
What
doing.
will they do? Will they just start buying back stock? Like, I just don't understand. In 6 years' time, 7 years' time, I think it's too early to start talking about dividends. I think it's too early to start talking about buybacks. But at what point do you start stacking so much capital that you have to start doing something like that?
Steve, real quick, do you have a mic with you? Can you just bring it closer, or you're not using a mic?
is that better?
Yeah, that's way better. Can you sit closer or bring it closer?
Yeah, I'll sit closer.
Okay, that's actually way better. Go ahead.
Okay, so Matt, let's stick with what you said, and then I'll share my screen. I'm going to keep this slide up so I don't forget. So, in regards to what do you do with all that cash? They have a ton of shares outstanding. So, obviously, buybacks is great for shareholders because it's the most tax efficient way to redeploy capital to shareholders. And not only does it increase the percentage of the company that our shares represent, it's going to increase EPS as long as EPS stays flat. As long as their earnings stay flat, their EPS will go up because it's distributed across less shares. So if they buy back shares and they increase earnings from operation, EPS will explode on a percentage basis.
That's correct.
That is definitely good.
Here's some quick qualitative things from CodeStrap: training, certification, free tier, dev relations. I think that free tier, that could be a big thing to use that money into, to just get customers into the product and penetrating without having to create a burden of contracts or anything. So
yeah, I mean, he would know a lot more about that than me.
Yeah.
And I agree with everything he said, because it would make sense. But when you don't have debt, you can take chances and you can continue to build out other products. But don't forget, we don't know how big this is going to be. I mean, if Ives is right, he's not the only one that has said AI is going to be the fourth industrial revolution. We really don't know what that means. So I go back to, okay, let's think about from the 90s forward. Internet, gigantic companies were made out of the internet. Cloud, gigantic companies were made out of cloud. AI could be the next one of that scale. And some are predicting it's going to be bigger. And if Palantir is that far ahead of everybody, good luck catching them. Good luck. I mean, I think that's the biggest thing. And admit, I said this to you today also. I'm not going to say what company, but when you, as a company, and Matt can attest to this, go through a large-scale implementation on a software platform, after you're up and running on that, it is incredibly hard to get a company to switch. Because not only have they embedded all their data into it, not only have they retooled the organization to use that software, going through another implementation to leave that system, especially if it's in manufacturing or somewhere else. The uptake to do that, the consultants you need to hire, it's a massive undertaking. In some instances, you have to backfill positions. It is not something employees look forward to. It's not something companies look forward to engaging with. So once Palantir has you and they're showing you success, going somewhere else doesn't make much sense. Would you say that's an accurate statement, Matt?
No, yeah, it's well, yes and no. I mean, I see some parts of the organizations that I work in that are very quick to change, but sometimes it's in 5 to 10 year cycles. But for us at UDoc, we continue to develop on top of Foundry. We're doubling down every day. And I think we haven't really introduced AIP into UDoc yet. We've seen the demos, but I'm fairly confident they continue to do more and more demos within UDoc. I almost said my company, UDoc. But anyway, yeah, I can only speak for UDoc though, right? So I can't really speak for others.
Yeah, I mean, it's hard to speak for others, but normally when a company undergoes an implementation to a software and they're seeing success, it's going to take a tremendous amount to get them to go use something else, because it's not just learning a new platform, it's the implementation. Implementation's time and money, especially if you're bringing consultants in to help.
I think this is really important from the report when I was reading the report. And by the way, if anyone wants to, just DM me on Twitter, @AdamIsInvesting. I sent out a bunch of them today, so I'll send you the email. DM me with your email. The thing in the report that was interesting was, we'll talk about the valuation model later, but I wanted to know, what does Dan Ives think is the moat? And it's similar to what you're saying, Steve. Basically, he was like, look, the enterprise spend on AI is going to be ridiculous. He calls it a trillion TAM. And he says he thinks Palantir is one of the only companies. He compares some competitors, but basically says why they're not going to be able to do what Palantir is doing, to implement a large-scale AI platform for an enterprise that can actually keep the data secure. I mean, he says a lot of other words in there that we've all been talking about, but it's very similar to Bank of America's thesis, which is that this is one of the only companies in the world that can train your LLMs and build the tooling, the AI infrastructure, to make sure you can sleep well at night, knowing that all your stuff is secure. And it seems like, as simple as a thesis that is, it is a very difficult thing to execute at scale, even with what you're saying, right? With the experience you've had at work, trying to put all your data into one software. And if they can do that within a couple of months, maybe even a couple of weeks, then the argument Dan is saying about when he talks to CIOs, chief information officers, and the first call that they are making, this is what they're telling him, is Palantir, because there's no other reference point, was his exact verbiage. That is exactly confirming what Karp was saying a month ago, which is that we are getting a shit ton of calls in 12 months, in 1 month, because we're the reference point. We're the guys that people want to talk to.
So I don't know how applicable this is, but when you look at, and anybody can do a Google search and try to look at the cybersecurity insurance market, I can tell you firsthand, cybersecurity insurance policies have gone up hand over fist over the past 2 years. The amount of cybercrime out there is crazy. Indemnification, companies don't even want to indemnify other companies using their products. Not going to get too much further into that, but companies, especially IT teams, are taking cybersecurity extremely serious. And Google doesn't even have IL6, and they're the third largest cloud provider. Palantir has IL6 clearance. What do you think that means? The only other two are Amazon, Microsoft. The 1 and 2 cloud service players. So for number 3 not to have it in Palantir, you got to believe that your data is pretty safe with them. And there's much less of a concern utilizing them.
I agree.
So I want to take a step back, because I think this is probably where people's heads might start running, right? So you've heard the word $1 trillion TAM for AI thrown around. Then you have the data analytics TAM. Let's just call it light, right? 300 billion. Maybe it's probably closer to the 900 billion in the next few years. Then you have the cybersecurity TAM. You have all these TAMs starting to compile on top of each other, right? But let's just say all the different things, simplify it, call it $1.5 trillion TAM. Let's say Palantir can get a 1% market share in that, which I think is light. Now you're talking about, just in that particular thing alone, a $15 billion annual revenue kind of coming through to Palantir. Then take on exactly what Stephen was talking about with a 33% free cash flow margin. That's $5 billion a year, strictly on that. And then, Stephen, based off of, because it's a metric that you love. I prefer price to cash flow from operations, because I'm an oil guy, and that's kind of where I focus. But what would you put a good price to cash flow from a good price to free cash flow?
I'm glad you asked.
Yeah, because you're making a $5 billion, let's just say in 10 years time, $5 billion in free cash.
So I want everybody to understand something. These numbers were before Q1 earnings. I did these last week in my Palantir article, but I want people to understand that a lot of people think the market's going up, and a lot of people think we're going to hit new all-time highs at some point in not the too far distant, maybe the next year or two. I don't know what's going to happen, but it is not abnormal to trade at a 30-time price to free cash flow. You have companies in here that are not tech companies. Pepsi Cola was trading at a 45-time free cash flow metric. Okay. Costco trading at 42 times free cash flow. These are not sexy tech companies. These are old school companies. I mean, Coca-Cola trades at 29 times. Now, keep in mind, these are from last week, so it's changed a little bit. But Microsoft was trading at 45 times. Meta was trading at 44 times. I mean, I don't even want to talk about NVIDIA or AMD or Tesla because really high. But you start talking about what is an actual real number that companies outside of tech trade for, it's not unheard of to trade at 30 to 40 times free cash flow. So on Matt's number, even if Palantir got a 30-time valuation, okay, if they're generating $2 billion in free cash flow, that's a $60 billion market cap right there.
That's reasonable. Yeah.
And if you're at 40 times where some of these traditional companies are, that's an 80 billion market cap.
Yeah.
And then you start getting into generating 3 billion, 4 billion, 5 billion in free cash flow. Well, 5 billion in free cash flow at a 30-time multiple is 150 billion market cap. And that's not even an overstretched multiple considering that Microsoft trades at 45. I mean, I think it's fair that Palantir, with all the growth that they have, I don't think it's unreasonable for them to consistently trade at a 40 to 50 time free cash flow because of how much growth there is in the future. Hell, if AMD, who's already hit a growth spurt, can trade where they're trading and NVIDIA trade where they're trading, and I'm not saying that the valuations are correct, but that people are willing to pay those numbers for
Market's willing to pay it, yeah.
So the market's ultimately the one that is correct because in order to make a market, you need to have a buyer and a seller. People are buying. If more people are buying than selling, it goes up. So I want to see what Palantir does over the next couple of years, but I don't think it's crazy to think that they trade long term at a 40 to 50 time free cash flow.
And by the way, everything Matt just said, that the way he got those numbers was not even including NATO spending a crap ton of money, governmental agencies. That was just off one TAM within one sector in terms of old data analytics. There's other sectors for Palantir to
And
be.
let's not forget about upselling on new products and new features.
And a 1% market share, it's probably more likely to be a lot larger than 1%, right? So I think the 150 to $200 billion range, I think, is really where I see this in the next 5 to 10 years. Well, I shouldn't say 5 years because that would kind of put it before 2030. By the 2030, 2032 timeframe, I'm really honestly thinking that it's going to be trading in the 150 to 200. I hope that they get me wrong because this is, keeping in mind, the thing that bothers me the most is the way I view it is they're so far ahead in terms of how they organize data and how they get everything to go. What is next, right? What is their fifth platform? What is their sixth platform? What is their seventh platform? Or is there one, right? And that's where I'm kind of like, what else can you build on top of everything that they're kind of doing? Are they going to get into hardware? Are they going to get into cloud? I don't like, this is where like, I don't understand, you know, and I think the thing that is interesting is the reason why they partner with AWS, Google, Microsoft in terms of the cloud is because they use so much cloud already. So it's like, at what point do they say, okay, enough is enough, let's apply our own cloud? Or is that even smart to do? Because the margins on cloud are less than what they're getting in terms of their operating margins anyway. So, you know, you play this game of what's next after this, because really, I mean, I know it's going to take a few years to come out and play out, but it's like, at what point do you sit back and say, okay, well, this is working, right? We're profitable, 3/4 of profitability. The cash flow is going to start getting pretty insane. at what point, thinking about Tesla in 2019, 2020, when they start to move things into a realm of like, what's next? Are they doing energy, robots, batteries, like all these things? It's like, at what point do they have that sort of moment where they step back and say, hey, we're making so much cash, we have to become some sort of technology conglomerate?
Yeah.
Or do they buy a large ownership percentage in the companies that they partner with? I'm trying to understand. Like, I'm thinking, you guys know me, I'm 10 years down the road. I'm trying to understand at what point and how does the company pivot into making themselves the next Amazon or the next Google in terms of market cap. Because if they play it appropriately, I think that they honestly could do that. But I'm just trying to understand, like, where would I go if I was making this much capital?
So,
And
Matt,
I'm really struggling to figure it out.
you're asking the right questions, but I think you're looking at the wrong companies to compare them to. And we know that Palantir is 5 to 10 years ahead of everybody else because start with Apollo, then Foundry, or Gotham, then Apollo, then Foundry, and now AIP. We know that they're very far ahead of everybody else. And they are probably working on something we have no idea about, that we don't even know that we need, because people didn't even know that they needed these things before. So I'm not too concerned about that. But I think Salesforce is a better company to use because, look, Amazon, there isn't another Amazon. You can't, when you look at the supply chain, Amazon has built the best supply chain behind the Department of Defense. Nobody can touch them. And you can't replicate that. And Palantir is not on the consumer side.
But I think if you compare it to something like AWS, which is I think what Matt's point is when he brings up Amazon, he's not talking about $1 trillion company. He's talking about AWS is $62 billion a year. Is there any world where we can stretch our imaginations and think if Palantir really does become the player in this fourth AI revolution?
I'm going to share my screen one more time.
And we're not talking about AWS as in like comparing the products. We're talking about comparing the revenue growth and the ownership of market.
So I think Salesforce, once again, is a better one to use. It's a little bit more realistic because they don't go after individual customers. It's all cloud-based. But you look at the arc of revenue and you look at the arc of free cash flow. This is a 220 billion market cap company. And there's no reason Palantir can't mimic this. There's no reason.
Agree. But Salesforce is also just boring CRM software. Like, that's where I get to Matt's argument, which is if we're not selling something boring, could this
but
be
hold on.
conservative?
Is it really boring, though? I mean, CRM is critical to a lot of businesses.
It's incredibly
it's
critical.
In the back end, and it generates a shit ton of cash.
Wall Street doesn't, like, love CRMs. It was cool, like, 10 years ago, but you know what I mean?
I mean, can you really say that looking at Salesforce is up 400% in the past 10 years?
Yeah, I get it. Salesforce is amazing. Mark Benioff's an OG. I love it. I'm trying to think like Matt here as well. Like, if they have this much cash and they have this type of free cash flow margin and their ability to take AIP,
well, they're going to have to make investments. Every company ends up making investments and acquiring companies or acquiring stakes in companies. Palantir's got a lot of options.
So I'm starting to say, so let me think if my head is in the right place. So the purpose of the company, just at its simplest form, is, and apologies if I'm getting too philosophical here, but I'm just like trying to get back to the core and the culture of the organization. And I'm really like thinking out loud. So if I say some bullshit, call me out. But if you think back to what the core of the organization is truly about, it's the operating system for the modern enterprise. So you're almost starting from scratch again. If you were to say, I mean, because you think about it, Microsoft was the solution for what we had in the 90s, right? So if you're starting from scratch again, building it from the ground up and starting it from kind of 2017 forward, that's what Palantir is trying to do, right? They're basically saying, here's the new applications that if you were to focus on data focused first, instead of usability, user interface and all this crap, it's like, this is where we're at. We get so much data coming in every single day. Our organizations are very much engineering focused. Our organizations are very much data focused, which at the time wasn't necessarily where we were back in the 90s and 80s, right? So you're restarting, and it gets me to think, it's like, okay, we start getting the normal Excels, we start getting kind of like the PowerPoints of the things. It's like what Palantir is doing isn't much different than what Microsoft started with in the 80s and 90s in terms of normal applications. It's just the more advanced stage of it, and the foundation of it is different comparatively to where Microsoft started.
Matt, you just made me think of something.
And so now it's just like, okay, at what point do they start to truly revolutionize internet search? At what point do they truly start to revolutionize the Microsoft Teams of the world? At what point do they start to try to, because what they're trying to do is basically become the foundational operating system for the modern enterprise. It's not any different than what Microsoft did, but Microsoft is starting off of old time data from the 70s and 80s.
Matt,
So,
go a different route.
Yeah.
Don't think about Windows or iOS, right? You said modern platform for the modern enterprise. What if, and you look at what Microsoft did. So they had Windows, they had Office. What was the next big thing that they did? Dynamics. Like take LinkedIn out of it because that was an acquisition and stuff, right?
Take what out of it? Sorry?
LinkedIn.
Take LinkedIn out of it because they acquired LinkedIn. Microsoft Dynamics is a direct competitor to Oracle's ERP, SAP, Paycom's HRIS system, ADP, et cetera, et cetera. What if Palantir goes the opposite route on Foundry and actually makes a ERP system for payroll and finance and HR and embeds everything in one platform, so you have not just the manufacturing and engineering side of the house, but you actually run your payroll out of it. You actually run all the financials, you run all your HR modules, learning and talent, and everything else. And they go after that entire space that every large scale company pretty much uses. I mean, everybody is using a product from either SAP, Oracle, Microsoft, ADP,
Salesforce.
Paycom, Workday. I mean, these are huge platforms. I'm sure your company uses one of the ones I just named.
UDoc uses Workday.
Okay. I mean, I mean, you understand how big Workday is in SAP and these companies. There's no reason Palantir can't build something. I mean, Workday was built because it was ex-Oracle engineers or ex-SAP engineers. It was one of those two companies.
Look, it's a good point.
Would that just be built off of a Gotham or a Foundry?
Why not?
Coach Rep says, what I loved about Ives' announcement today is it literally proved what I said last week. The gap in understanding is the opportunity. Wall Street is waking up, and we are the 5 a.m. crew. And to this point, I think Steve and Matt, this like imaginative kind of exercise you're doing right here, I think this is what not Coach Rep. I think this is what Dan Ives is starting to realize. Because on the call today, he said it's an unknown player in the space, but every CIO he's talking to, unless he's bullshitting, which I don't think he is because he has institutional clients that he's investing on behalf of, are saying, we call Palantir when we're even considering this. So to your point, Steve, if you're talking about imagining them taking over HR or finances, or to Matt's point, truly being an operating system like Windows was, if the CIOs, which are the decision makers, are the guys that are calling Palantir to inquire about this, doesn't mean they close every deal, but it does mean it confirms this thesis that they could be much larger than we think.
Be very clear that CIOs are not the decision makers.
Agreed. They're the chief information officers. The CEOs, the chief data officers have to make the decision, but they're the ones who are acquiring to try to figure it out.
The CIOs are calling to get the specifics and get the understanding, and then they're going to bring it to the table, and you're going to do a massive RFP, and then you're going to bring the end users in for whatever it's going to be. And the CIO is going to be like, yes, all of our other stuff is going to work with it. Yes, this is going to work for the company. But the other departments are going to say, this is going to work for our department. And this is going to work for HR. This is going to work for finance.
Yeah, so my point is, if Dan Ives is saying Palantir is the first call they're making.
And I believe it.
I think that's what triggered him to do the price target. Because I also want to get your guys' thoughts on this, okay? So we can transition a little bit to Q2 and what I'm expecting from that. I was talking with Adam Bergman, shout out to him, on the phone today. I am so scared and excited about Q2. I'm excited. Well, let me do why I'm scared first. I'm scared because management guided 1 or 2% revenue growth quarter over quarter. Yeah, we know they're going to be GAAP profitable. And maybe they may surprise to the upside on customer growth, even though the rate of customer growth has been declining. I am scared Q2, we don't figure out customer growth expansion. Revenue comes in flat. Maybe we beat by $1 million or $2 million and we're GAAP profitable, but it's not that exciting, right? Like that could be a quarter and maybe the stock stays where it is, or maybe it tanks because it's just like not that exciting. And if anything, the justification of a almost $40 billion company now just can't be justified with that type of growth. That's the bear case for it. And there's obviously some other things that could go wrong, but Karp could bang on the table, but that's the bear case. The bull case is they figured out their customer count. And even if the revenue has not been generated off that customer account, if they have an increase in customer count, we know that Q3, Q4, that revenue will eventually be recognized because they got the customers to be able to get to that point. And then if the market tanks, it's a massive buying opportunity because if they increase customer count, but the high frequency trading algorithms don't care about customer count, all they care about is EPS and revenue, that's a dip that we need to buy because we know the revenue's coming. The interesting thing about Dan Ives is it's a week before Q2 earnings and he puts out this report. And so I'm just kind of like spitballing in my head here. I'm like, I don't think a guy with the type of credibility Dan Ives has, he travels across the world, international institutional clients recommending what stocks to buy. He's a stock picker and he's a tech stock picker. I don't think a week before earnings, he's putting his reputation on the line for them to tank to $11 or $12 or $8 because they just absolutely shit the quarter. I think, and this is me with tinfoil hat theory, I think a lot of these Wall Street insiders truly know people in the game. I don't think they put out a report because he could have put out this report weeks ago. Nothing has changed over the past 3 months. If he wanted to put this report 3 months ago or now, I think the reason he's doing it before Q2 earnings is to make himself look good. And the reason he's making himself look good is because he got some type of confirmation either by the street or by Palantir themselves, which I know is illegal, but we know this shit happens, that Q2 is going to be a good quarter. What are your thoughts on a guy like him putting his reputation on the line before Q2 numbers? Because he could wait right till after Q2. He doesn't have to do this right now for him to be this bullish on the company. Any thoughts on that as a concept?
I think that somebody like him doesn't really care about one quarter. I think he cares more about the next 5 to 10 years.
But I don't agree with that because if that's the case, why not wait till after Q2? I fundamentally disagree with that.
Because he doesn't care about Q2.
No, but so why wouldn't you put the thing after Q2? Why would you, like, let's say Q2 tanks the bed and he looks pretty dumb.
See, this is the problem that I have with a lot of the people in the Palantir community. And I'm not trying to shit on anybody here, but like I look at Q2 as a check-in. I don't look at Q2 as a be-all end-all, and I think a lot of people in this community still do. It's like, so who cares if it slips?
No, but Matt,
$11.
I agree with you. I think a lot of us agree with you. I'm talking about pure psychological. Like, let's forget we're Palantir shareholders. Why would an analyst say a stock that's at 16 is going to go to 25 a week before earnings if he doesn't give a fuck about Q2 earnings? And then if it tanks after Q2, then he can put it out, or then he can put out a revised
because
update.
He's not caring about Q2 at all.
No, that is incorrect. That's incorrect. He's a short-term Wall Street guy. He downgraded Tesla on the Twitter overhang when that was a stupid reason to downgrade. He did it because he was caring about the short-term updates on Tesla.
Did he give a time frame on 25 price target?
No, he's just using 10x.
If he's not giving a time frame, then it's irrelevant.
No, I disagree with that. Look, these guys that put out price targets, there's a reason Bank of America went from 13 to 18 after Q1. Hold on, let me speak.
It depends what Palantir delivers.
Right, but let me finish.
The
reason Bank of America put that price target out is because the numbers got a little bit better to them. Like, okay, cool. The reason he should care about Q2 is because why did he downgrade Tesla to 175 and drop to 100 in January? Is because he thought Elon paid $44 billion and he's spending it way too much time. The long term on Tesla, it's a $4 trillion company or something. So why does he care about this one quarter? He absolutely cares about a quarter because these guys' reputations are on the line. They would lose institutional clients if they get the quarter to quarter wrong. So to me, I'm just putting it out there. I think he absolutely cares. If Palantir goes to $10, you think he's going to be happy? You think his institutional clients aren't going to be like, what the fuck? You just said it was going to 25 and now it's at $10. And he's going to have to be like, oh yeah, they had a shitty quarter. Like, so why did you tell us to buy the stock right before they had a shitty quarter? Your fucking analyst couldn't figure out it was going to be a shitty quarter.
Let's go back to what he said. Was when he was talking for that 5 minutes when we opened the beginning of the conversation, was he talking about next week we think it's going to be XYZ, or in 2 weeks when they give their earnings report it's going to be XYZ? Or was he talking about the long-term $1 trillion market opportunity that they have in AI and how Palantir is going to be at the forefront of it?
That's irrelevant to what I'm saying.
No,
I don't think it's irrelevant at all.
You guys are hung up on why he put out the report. we all know he's bullish on Palantir. My question is the timing of it. Why didn't this happen a month ago?
Because he wants to be first, not last. To him, it's
Wait, a
about
month ago he could have been first. So why didn't he do it a month ago?
he may have not come to the epiphany a month ago.
What do you mean? So what? So they researched the company in 1 month and now they're like, oh, Palantir is a bit. No, they've been doing research for a long time.
Look, something may have clicked. Obviously, nobody knows what it was, but something made him do it. Something clicked, and he believes that this is going to be a very good long-term opportunity. And if it goes down, he's just going to come out and say, "Doesn't matter. The TAM is still there. The opportunity is still there. This is an even better buying opportunity to dollar cost average into the position."
Yeah, I think if he's thinking about a 3Q or 4Q target, why is he bringing up $1 trillion market opportunities?
Yeah,
that's just him marketing his pitch, right? Like he has to market his shit. Karp says $1 trillion. My point is the timing of this is oddly peculiar because if you don't give a fuck about this quarter, then just wait till Q2's after. It's not like he's in a rush to be the first guy talking about Palantir on Wall Street.
Okay, but if they smoke Q2 and it goes up, 25 doesn't become nearly as.
So that's my point. That's my point. I think he's evaluated the risk reward, maybe because he's really dug deep.
Gamble of when to put it out.
No. But here's my second argument. You're forgetting the first reason I even brought this up. I don't think he wants to let his reputation rest on a gamble with a speculative name like Palantir. Because if they tank the bed, he looks really stupid for saying $25.
I don't think it hurts.
He's not been that wrong for the past 5 years. He's been right on a lot of stuff. He's not like Kathy. That's like Roku to 1,000.
In the short term, if Palantir goes down, I don't think it hurts him at all.
I don't think it hurts him. I just think I think he would, if he knew it was going to be a bad quarter, he wouldn't put out that report right before. He would just wait, just like let the quarter happen, and then if it goes to 11, you could say price target 18. That's still a huge upgrade in my opinion.
So let's go back to Amit being worried about Q2. So I want to throw some numbers out there. So Palantir guided for revenue to come in between 528 to 532 million in Q2, and revenue of 2.18 billion and 2.23 billion for the full year. In Q1 PLTR, they delivered 525.2 million in revenue, which is 24% of the low end estimates and 23.5% of the high end estimates for 2023. For Palantir to meet its 2023 full year revenue guidance, it would need to generate an average of 553.27 million in each quarter, Q2, Q3, and Q4, to meet the low end projection, and an average of 569.9 million to meet the high end estimates.
Yeah.
So, look, that is from my article that I wrote last week. I crunched all the numbers. I'm expecting Palantir to deliver at least 550 million in Q2. I think they're going to deliver more, but for them to meet their low end estimates, they're going to, if you look at their sequential arc of quarter over quarter revenue growth, they're going to have to throw out at least 550 million to keep that arc just to meet the low end estimates. And if we see anywhere from 550 to 575 million in Q2, it's going to be a strong indication that they're going to make the high end estimates this year.
Now, see, here's the interesting thing. Dan Ives thinks they're only growing at 531 next quarter. He thinks there's only going to be 16% revenue growth for the whole year.
Maybe.
And he's still giving them a $25, which is so interesting to me, right? I'm like, what the fuck does this guy know? He's estimating conservatively below Palantir's guidance and still putting a $25 price target on that.
That goes back to Matt's point that he's looking at the very long-term TAM of this and the opportunity.
I agree.
And that Palantir is very far ahead of everybody else. And, look, their high end is 2.3,
I think.
2.3. So,
and that's 18%.
Palantir would need to record 550 million in Q2, 575 million in Q3, and 601 million in Q4 to generate 2.25 billion in annual revenue. I mean, they would need to average 4.6% quarter over quarter revenue growth to do that. I think they're going to do it. And getting past that 600 million quarterly revenue number on a quarter over quarter growth in Q4, not saying it's going to happen in Q2 or Q3, but eventually getting there this year it sets the stage to eventually getting to that billion revenue quarter basis. And when you do that and you look at a 33% free cash flow margin, that means on an annualized basis with no quarter over quarter revenue growth, you're generating $1 billion of free cash flow annually. And then when you start throwing in that growth, you're over $1 billion free cash flow positive annually, and it's growing. Like, these are very specific numbers that are very important to the upswing that we could possibly see on shares.
Coach Rep says, I saw an AIP Deep Dive and released Shyam's vision for Foundry and combined with LLMs. I wrote an article about this. Palantir is made for this moment, and they will be it. Matt, go ahead.
No, I agree. I think I said this very early in the May timeframe when they first gave us the AIP demo at UDOC. And I think with it, it wasn't like, oh, we had to tailor Foundry to do this, or, oh, we had to, it was seamless. It was like as if everything that they've been doing in Foundry, the organization of the ontology, the language models, exactly what CodeStrap was saying, was set up for this next stage. And that's why I'm sitting here being like, what else are they sitting on that they're not telling us in terms of what's going on in the future? Because they had this roadmap planned out, and they know where they're going. Because if they weren't, AIP would not have been so seamless, right? It would have been trying to put a square peg in a round hole, and it just wouldn't have worked. But in reality, it was like, oh shit, yeah, that makes sense. Oh yeah, that was organized the way that it was. We know that that's a warehouse. In the example that they showed us, which was like a piece of a sales equipment which feeds into a product, is no longer available. So they have to source it from a warehouse within the next 50 miles or something like that. And it knows the ontology of everything that's being asked, who the stakeholders are, to be able to email back and forth, and who has the decision rights. And that is something that's already kind of built in within Foundry and Gotham. And so it was just very interesting.
It's a good point. Also, I said this publicly already. I had lunch with a Palantir employee last week. I actually got to see their New York offices. And I asked him, I was like, yo, why don't you work at Google? Like, you're a pretty smart guy. And he was like, I can't imagine working at Google and looking at my fellow employee next to me playing Candy Crush on his iPhone. And so his point was just like, there's a mission at Palantir.
Can you answer if this person's initials were SG?
No, it was not SG. Why? Do you know someone SG? No, I don't.
Yes, I do.
Okay. But his point was just like, I'm working here and I'm working like a dog. Like, he's working like crazy. He's like a technical dude because I believe in the shit that we're doing. And he could probably make more at Google or Amazon. And so like that to me kind of validated a little bit more about the culture as well. What you're saying, Matt, is like these guys actually think they're building the future. And that's why it took him 7 rounds of interviews to get into the company, which leads to the next point. This is the last topic for the week. Alex Karp wrote a letter in the New York Times, an op-ed. I think we woke up to this Monday morning, and it's not every day you wake up to your CEO doing an op-ed in the New York Times talking about how the progress of AI and the rapid speed of development is similar to our generation's Oppenheimer moment. For those that don't know the story of Oppenheimer, he was the person who essentially came up with the theoretical application of the first atomic bomb. And then he worked for a couple of years from 1942 to 1945 to actually build that bomb. And then Henry Truman dropped that bomb on Japan, Hiroshima, and Nagasaki. And he led a life of a lot of guilt and mixed feelings because he felt he was responsible for killing about 100,000 people in a couple of seconds. So what did you feel? Let's start with Steve. Did you get a chance to read the piece, or any thoughts on Karp's analysis philosophically about our Oppenheimer moment?
No, I saw the highlights, obviously, from it. I didn't read. I could care less about the,
So you didn't give a fuck. Okay, Matt.
No, I could care less about certain publications. But look, it's not what I read. I read CNBC, Wall Street Journal. I don't have time to read a regular newspaper.
Okay, that's fair.
Look, think about why Alex Karp left Silicon Valley. Think about what he's continuously said time and time again. I mean, from what I know about the article, it just seems more what he has said for years and years.
Okay. Matt, your thoughts on the article, or at least the headline?
I think, it's not any different than what Elon kind of says. While it's something that is necessary, and it's the next progressive step within technology, just like I guess the change. And let me take a 5,000 foot step back. I think what he's talking about is with respect to the military complexes of the world and how everyone is kind of being recognizing now. And I guess maybe it's just new for us younger folks that didn't have to live through the Cold War, but how things truly changed from a military perspective once the atomic bomb was released. And I think the same thing is going to happen with AI. A lot of new developments, scientific developments that are funded by governments, that are funded by militaries, that are funded by a lot of these other things will have byproducts that I think we don't necessarily fully comprehend yet. And so having the right safeguards in place and right treaties in place to make sure that this doesn't get out of hand very quickly is what I think that everybody is truly concerned about. I know Musk is concerned about it. I know many other folks are truly concerned about it. Some people aren't concerned about it at all, thinking that it'll kind of regulate itself. And so I think that, I didn't read too much into it. I skimmed through the article, but that's kind of the feel that I get, is that, this is the next step of progression, and it's a natural step just based off of where we are. But with it will come side effects and complications from a geopolitical standpoint, from a military standpoint, from a technology standpoint, from a safety, security, privacy standpoint, that I think will have a lot of side effects.
No,
Anyway.
I agree with you. I think Karp really wanted to pen this article for the New York Times. I think he loves this moment of being potentially seen as one of the most influential CEO / thought leaders / philosophers of the next 10, 20 years, right? Because to say this is an Oppenheimer moment, remember, Oppenheimer ended up creating something that killed 200,000 people and led to the proliferation of nuclear weapons. I'm simplifying it, but like that's kind of the gist of the whole point of why the movie, the book was created, all that stuff, right? That was one of the most important things in humanity, that this guy was alive and he made this weapon, or he came up with the physics to be able to develop this weapon. If Karp is saying this is our type of moment, and given all the Ukraine stuff, he's starting to see how powerful it is, given the stuff he has said. I think he's really embracing the role. And you know why I think he's embracing the role and why he likes this philosophy role? Because we've been talking about competitors to Palantir. There's this small company at $7 billion called Scale AI. CEO is Alexander Wang. Alexander Wang, I did a video on him a while ago, gave a TED Talk last week. And in that TED Talk, the whole entire TED Talk was him walking on stage. He's like 26 years old, trying to sound like he's a thought leader around American democracy at the intersection of artificial intelligence and underpinning the geopolitical crises we will have over the next decade. And the reason why he's doing this TED Talk is because he wants to sell the same type of Gotham-esque software to the government that Palantir is selling. And so it's obviously a very effective sales and marketing tactic to position yourself as one of those types of philosopher CEOs. That's kind of the defining I guess, thought leader of the moment. And I think Karp's embracing that. Now, the question is, will that translate to sales? And I think eventually, if the brand gets as big and people start taking AI as seriously, then it theoretically could, which is important. Okay. That's it for the weekly. Do we have anything else, Steve, Matt?
No, I'm gonna make a brain map, kind of where I was going in the middle of the episode, and try to understand if I have any forward predictions for what upcoming pieces might be out there.
CodeStrap says Apollo is starting to get momentum. He commented a little bit on sales above. He said sales are, he said he can't comment on sales, but he says we are aligned, meaning sales might be going a little bit better. Yeah, I mean, Q2 is going to determine a lot. Q2 is going to. So I disagree with Chris here. He says Apollo is unique, AIP not so much, but I might be wrong. I originally thought that as well when AIP came out. The only reason I think that AIP is unique as well is because of what Dan Ives and what Bank of America is saying. I mean, their research teams have seemed to say that this is.
And what are they saying so that people are?
Well, they're saying that it's one of the only platforms at a large scale to implement into an enterprise that can confidently secure your data and implement that. And I know that sounds really simple. But when you take a look under why Databricks bought Mosaic for $1.3 billion, like $1.3 billion just to be able to build some of the tooling infrastructure that Palantir has spent years building, it starts to seem not as basic of a moat. Same thing with Snowflake acquiring Neva. They don't even have a generative AI application yet that they can offer to enterprises at scale, right? They're still developing their stuff in partnership with NVIDIA. It seems like it's a reasonable moat that they can build on top of to protect companies' data. Especially when you figure that the data, the LLMs don't matter unless the data is proprietary. And in order for the data to be proprietary, it has to be trained in something that's a secure environment. You factor in IL6, all that stuff. So that's why I think AIP is unique. But I also think Q2, we're going to have to figure out, like, what is AIP adoption looking like? And Karp's going to have to answer those questions of if it's going well.
See, I think this is where it gets tricky, right? Because it really was only rolled out in June 1st. And so everyone's sitting here, with 1 month left in Q2, thinking there's going to be all this massive growth, and it's going to be massive customer growth year over year. And it's like, it literally was released less than 2 months ago. And I think everyone's putting their second step in front of their first, and not letting the company, walk before it can run. I think people, and this is the problem that I have with everybody focusing on Q2, and we can get more into it next week as we kind of wrap up for it. But everyone's thinking that 1 month worth of, excitement and customer growth is going to blow everything out of the water. And I really think that they need to limit their expectations a little bit.
Look, Matt's correct. For the simple fact, you look at cloud computing, not every organization has even moved to the cloud yet. There are organizations that are still on-prem. So adoption is not at the speed of light. Adoption is not overnight, and adoption takes time. And AIP was just rolled out. Companies haven't even begun to think about how they're going to implement AI. Very large scale, probably have, but a lot of companies aren't there yet. Like, there's a huge roadmap and runway, and you look at what Salesforce has done in growth. That's because it takes adoption for CRM. Even CRM, which is the backbone of a lot of things, takes time to be adopted.
So I agree. I agree with both of you guys. And I've been saying publicly on like a trillion streams I've done, saying that I don't think Q2 is going to be that golden quarter. However, there is a valuation that is unsustainable if Q2 is not somewhat close to that golden quarter. And Karp put himself out there saying we're getting a shit ton of demand. That's why I think that's where it gets to the scary part, where Q2 we have a massive tank.
Look,
because hold on, let me finish. If the demand is not there, because to Matt's point, it's hard to get it there in a month, right? Like, totally reasonable. And that means the revenue growth is not there because the demand is not there, or because the closing of the demand is not there. And the valuation is still 40 billion. I don't know how we support that valuation that easily. If Q2 is not
miss, it's going to be very bad.
Yes, it's going to be bad.
This is
then I go to Dan Ives saying 25 right before earnings, and I'm so conflicted, right? That's why I brought it up.
Look, it's a critical quarter. There's no question about that. If there's a mess, and if the demand is not exciting, I don't even want to wake up the next day and see what happens.
But I have a question though. Why is it critical? Why is it a critical quarter? With 1 month to sign people
up. Valuation, because
no, I'm not talking about AIP. I'm just saying if they don't continue their sequence of growth in these categories, it puts their guidance for the year at jeopardy.
We're going to be
tanked. That's what I'm worried about.
Like, and that's fine. I want to buy a dip, but we will tank.
Same here. And look, it depending on what happens, I'll probably be a buyer. But from where we are right now, it's critical. Long term, maybe not. But for this point in time, it's a critical quarter.
Long term, absolutely not. Unless there's some crazy thesis breaker or something that happens to you. Long term, Matt's 100% correct. But that's why I kind of don't like that. I was kind of happy SoFi was dropping a little bit yesterday. It came back up because before earnings, you run up, you fuck up the numbers, you're gone, right?
And then when's AIP 2?
September.
Okay.
Which is kind of bullish because they have a second conference. So you kind of think, maybe they did close some more customers, but we don't know.
Yeah, but then you're going to be sitting around being like, oh, Q3 earnings, it's going to go to the moon. And it's like, well, they only had AIP 2 in September, and they only had a month from that display. And
I'm not worried about the stock going to the moon at all. I'm worried about customer count and revenue. Like, I don't give a fuck about the stock. I hope the stock doesn't. I kind of hope the stock does tank. But my point is, at this valuation, we need some metrics like customer count and revenue to be decent. And if they're not, we're tanking. Now, that's great for long-term buyers. But the point is, if we're just speculating before earnings, it's really confusing because then I put in Dan Ives' report saying, hey, 25 before. And I'm like, this guy wants to say 25. And then no one in the planet wants to say the stock's going to 25. It doesn't matter what your time frame is. No one cares. Everyone sees the headline. And then a week later, the stock's at 11. Like, no one wants to be that guy or that girl. And so that's the confusing part. But to your point, Matt, Q2's numbers are probably not going to be great because we can't expect for a month for them to sign up to shit when people are 95% of companies are still on.
I don't know that they need to sign people up from AIP. There's other ways to generate revenue. They can
I
sign
don't know.
up for Foundry.
I think you and I understand that, Steve.
Net dollar retention. I mean, upselling on other products. There's other ways to get to their guide. I'm worried about their 2023 guidance. I'm not worried about if they signed up customers from AIP or not. I'm worried about them continuing the commercial growth. They can't slow down on that. That is a big thing. AIP is going to come. AI is in its infancy.
Yep.
And an AIP Con 2, and then eventually having more conferences, to me is bullish because I would like to see this turn into a Dreamforce type thing in the next 5-10 years.
Yeah, I agree.
Yeah,
I agree.
I just hope that people understand $40 billion for the company today is overvalued.
I agree with that.
Yeah, look,
I 100% agree.
we need revenue to go up and then maintain margins. Because if you take everything else away from that, okay, take IAP, take Foundry, take everything away from it, you just look at a straight dollar. If they keep growing and they maintain these margins, you get to 10 billion of revenue at some point at a 33 or just a 30% margin for free cash flow. Do the math. Like, it's not hard to see how they can get these revenues. It's not hard to see how they can generate the free cash flow. They're already doing it. And then it's not hard to see what other companies are trading at, and Palantir possibly trade at 150 billion market cap.
Agreed.
If Pepsi-Cola can trade at 45 times free cash flow,
One Lambo.
there's no reason to say that Palantir can't generate 5 billion in free cash flow 5 to 10 years from now.
Agreed.
And then trade at 40 times, that's 200 billion market cap.
Coach Rep says agreed. We're a couple of years out from AI adoption at scale, but without Foundry, you ain't going to get there. And that speaks to having your ontology.
Yeah,
and all
and
that
the
stuff.
more people that sign up Foundry, the more people you have that can implement AIP into their organization, and that's more upsell. I'm not worried about AIP today. And to me, it's a good point.
Yeah, I think a lot of, I know that you want to keep ending it, Amit, because you probably have a date or something, but I think without any sort of ontology in your organization, if you think you're just going to jump from having no sort of ontology, large language model, or anything that organizes your data to immediately jumping to having AI or an open AI sort of product, a BARD or an AIP come in and within days be up and running, you have another thing coming. And that's part of the thing that I think was most seamless about UDOC and where we are in terms of, we haven't adopted AIP yet, but I see how AIP could be adopted and implemented very quickly with guardrails. With a lot of organizations that don't have any sort of large language models or ontology or anything like that, you can't even worry about the guardrails because you got to worry about getting your data in order. And that takes months, if not years, to be able to get it in an appropriate manner. I guess it all depends on the complexities and how complex your organization is and how many different sort of categories you have for each individual and what's the different levels of all the categorization and everything like that. But AIP is easy, in my opinion, to implement once you have that sort of organization, which we've been organizing ourselves that way since 2017, 2018 at UDOC. So it seems like a natural progression. So.
All right. That's it for us, everybody. Hope you enjoyed. We'll see you next week. And next week's the last episode before earnings on Monday. I'll be streaming it on the channel. And we'll see what comes in. We'll keep
Palantir to zero.
It's at 1840 after hours, bro. People were buying after hours. It's just that Dan Ives report moved the whole market. It was crazy. It's absolutely crazy. All right. Thank you, everybody. We will see you. Thank you, Coach Rep, for being in the chat. Thank you, everyone, for being here. We'll see you guys next Friday. Have a good one. Bye-bye.